The East Coast is slowly getting back on its feet after Hurricane Sandy, but some industries may take a bit longer to recover. So which industries are going to fare better? Let's get some thoughts from Alec Young, Global Equity Strategist at S&P Capital IQ. Good to see you here, Alec.
Great to be here.
You know, anytime there's a major storm, we sort of look at the usual suspects, right? Insurance companies, oil companies, airline stocks. Are these the same companies that are going to feel the pain of Sandy?
I think for Sandy, it really depends a lot on your time frame because first of all, we think the storm is probably going to aggregate to about $50 billion in total damage.
Wow.
About 20 of that is going to be from property damage from the storm. Most of it is going to come from business interruption, but you know, if people aren't able to spend money because of the storm, there's going to be pent-up demand. That's money they're probably going to be spending, you know, in the next 6 months. Similarly, in terms of the property damage, that's rebuilding that's probably going to happen in the next 6 months. So in the short term, there's a small economic hit, a big economic hit for the Northeast. Nationally, it's a relatively small amount, $50 billion. But over a 6-month period, when you factor in the rebuilding and the pent-up demand, we think in the aggregate, there's not going to be too much of an effect on the economy. The one wild card is in the short term, say November, there's going to be a lot more uncertainty around economic data.
Right, absolutely, because we'll have disruption really for weeks, at least in the Northeast.
Yeah, I mean, you just won't know at a time when there's a lot of sensitivity about, you know, the health of our economy, whether a number is clean or, you know, economists are going to be really useful in helping to explain just how Sandy affected the headline numbers.
So stock-wise, insurance companies at risk?
I think the biggest area that we're really seeing some negative fallout is the utility sector, and that's a sector that we at S&P Capital IQ and our equity research business have been underweight for a while. Not that we were, you know, wise enough to know that this was going to happen, but it's been a very notable underperformer since the storm started.
How about telecom companies? So we did have some service disruption with telecom companies.
We have, that's an area that had done very well coming into the storm through, you know, I would say August. It was up about 20% at its peak year to date. And we started to see some profit taking just on valuation. The sector is trading at about 20 times earnings, and people felt that while the yields were very attractive, you know, between 4.5% and 5%, that maybe it had gotten a little ahead of itself. The earnings growth is not as robust as in some other areas. So we were already seeing some profit taking, and I think you know, concerns about infrastructure damage around some of the big players kind of fed into that. But those dividend-paying names in the telecom space have held up, you know, much better than in the utility space.
Let me ask you as well about financial firms. We know there was a complete disruption to stock trading here in New York after Sandy. Are we going to see that play out in terms of earnings for some financial firms? Are there ripple effects from that?
It'll be interesting to see. I mean, I think at this point I would say probably not too dramatic given the length of the interruption was fairly brief. In addition, it's happening at a time when the U.S. economy, the momentum in the numbers is improving. We're certainly seeing a lot of momentum in the refinancing area, in the housing area, and that's accruing to the benefit of financials. It's actually been one of the better performing areas recently, including in the wake of the storm.
And in terms of some of those rebuilding efforts, does that mean anything related to housing or construction should stand to move higher, stock-wise?
What we've seen in the short run is a positive impact on players like Home Depot, you know, around the whole, you know, rush to shore things up and maybe fix things in the short run. Obviously, you know, the power generator type of companies. I think as we look further out, you know, the home builders are very regional. So you know, players that have a bigger footprint in the Northeast, it's going to have a bigger impact. A lot of them are in different regions or, you know, more spread out. So it's going to depend company by company. And the other thing that's critical with regards to home building is, you know, a lot of this damage was flood related, and that's not covered by the private sector. That's covered through the government programs. So what are the reimbursement rates going to be? And I'm not sure that every dollar of property damage is actually going to be rebuilt because the reimbursement may not be there. And those consumers who are under a lot of pressure right now may not be in a position to go in their own pockets to make up the difference. But the good news is it's happening against a backdrop of a clear improvement in housing momentum. So the storm, I don't think, has really derailed the nice price action that you're seeing in areas like home builders.
And what about the election? I mean, do you think we're going to see a significant impact?
I think in the short run, we're getting a very nice rally today. I think part of it is, just getting rid of the uncertainty. Hopefully we won't have a cliffhanger situation like we did in Florida 12 years ago. It is a very close race. I think the assumption is we will have a winner, in the short term. So just getting rid of that uncertainty is going to be positive. In terms of who wins, I think it's really just too close to call with any conviction.
Well, did the storm disrupt possible voting patterns that might actually have an impact?
I think the storm, if you look at the polling on the storm, is in the Sunday time frame, the results were about 65% favorable for the president versus only 15 unfavorable. So I think Romney had some pretty good momentum, but the storm kind of stole the show, and I think that's helped Obama a bit. But Romney has been very strong. So even with that edge, I think it's very close to call. One interesting point, a lot of the polls in the swing states were showing Obama ahead, but a lot of those polling companies are assuming the demographics of the turnout will be very similar to 08. That assumption actually gives the polls a bit of a leftward skew, because a lot of the traditionally pro-democratic groups like young people aren't necessarily expected to turn out as strongly, and meanwhile Republican base is a little more energized. So if you add it all up, I see it as being a very close race, and no matter who wins, there are pros and cons whether Obama wins or Romney wins.
Right. We'll wait and see. Alec Young of S&P, thanks so much. Good to see you here.
Thank you.
I'm Rhonda Schaffler. This is Reuters.